Hey everyone, welcome back. Today we're talking about something that sounds incredibly boring, but is actually the secret sauce to making money in the markets: patience. In the world of finance, we're often told that action is what gets results, but in reality, patience is that quiet trait that separates the profitable, calm traders from the ones who are constantly stressed out. Did you know that professional traders actually spend about 73% of their time doing absolutely nothing? To the untrained eye, this looks like idleness. To the professional, it is strategic boredom tolerance. The primary obstacle to profitability isn't a lack of technical knowledge, it's the inability to handle the quiet. Patience is the boring trait that separates the professional from the stressed-out amateur. The central problem is a fundamental misunderstanding of the job. Professional trading isn't about constant action, but about the relentless pursuit of high-probability opportunities while ignoring the noise. Patience is one of those boring-sounding traits that quietly separates profitable traders from stressed-out ones. The beginner views inactivity as a missed opportunity, a threat to the ego's need for control. The professional views inactivity as preservation. Most market movement is simply noise, low-conviction price action that exists only to shake out the impatient. Learning to sit on your hands while the market chops is not a passive failure. It is an active, disciplined component of a winning strategy. Impatience, the silent tax on your portfolio. Impatience functions as a silent tax, but it isn't just paid in commission, it is paid in capital erosion. The mathematics of impatience reveals a stark reality. Impulsive traders often risk 20% or more of their portfolio on low-probability setups driven by FOMO or revenge trading. This is a mathematical death sentence, a phenomenon known as gambler's ruin. Conversely, the patient trader risks a calculated 3 to 5% only when the odds are heavily skewed in their favor. Critically, this tax is levied at both ends of a trade. Impatience manifests as the entry problem, forcing a trade just to make something happen, or chasing a stock after it is already run. The exit problem. This is the cortisol-driven urge to cut winners too early out of fear they will reverse, or moving stops too fast, which suffocates a trade before the real move begins. When you trade with impatience, you're trading your emotions, not your plan. The value of being right over being early. In the ego-driven world of finance, there is a dangerous allure to being the first to spot a trend. But in the markets, there are no prizes for being early. There are only rewards for being correct. Being early feels smart. Being right pays. Professional patience is rooted in timing. Most significant market moves occur during specific windows when institutional flow creates directional momentum. Entering at 11 a.m. during low-volume lunch hour just because you're bored is a recipe for disaster. Patient traders wait for institutional confirmation, price action backed by significant volume, proper pullbacks, identifying value rather than chasing peaks, time of day synergy, trading when the smart money is actually active. Creating these signals creates a superior risk-to-reward ratio, ensuring that when you finally do risk capital, the market is already moving in your direction. Cash is a strategic position. A common psychological fallacy is the belief that if you're not in a position, you're not trading. This ignores the reality that markets spend roughly 70% of their time in consolidation, moving sideways in a state of indecision. During these phases, capital preservation is the only goal. Understanding market cycles and volatility patterns allows a trader to recognize when the environment is toxic to their specific strategy. In these moments, you must adopt the professional mantra, cash is a position. Sitting on the sidelines during bad market conditions is a high-level skill.
It preserves not just your bankroll, but also your emotional dry powder for when the 30% of high-conviction movement finally arrives. Transitioning from reactive gambling to active waiting. Patience is to be confused with idleness, or worse, analysis paralysis. Professional patience is active waiting. It is a proactive state of continuous analysis, monitoring trends, and refining your watch lists so that you are prepared when the criteria are met. True patience requires a fundamental mindset shift. You must move from the anxious question, "What am I missing right now?" to the clinical inquiry, "Is this setup worth my risk?" However, there is a crucial distinction. Patience is waiting for the setup. Decisiveness is taking it. Analysis paralysis is a fear-based response that masquerades as patience. Once your predefined criteria, support, resistance, and volume align, the time for patience is over. The professional trader shifts from a state of quiet observation to one of aggressive, disciplined execution. Conclusion: the probability game. Trading is a long-term probability game where individual trades are statistically insignificant compared to the integrity of the process. Developing strategic boredom tolerance allows you to sidestep the emotional pitfalls of the retail herd, leading to lower drawdowns and higher win rates. Refining your patience in the market will inevitably enhance your life outside of it. It builds emotional regulation and the ability to distinguish between a want, the dopamine hit of a trade, and a need, the execution of a high-probability plan. As you look at your screens tomorrow, ask yourself, is your current strategy a disciplined business plan, or is your low boredom tolerance currently acting as a voluntary tax you're paying to the more patient players in the room?
Thanks for hanging out with me today. If you found this helpful, let me know in the comments. Would you like me to create a visual breakdown of a high-probability setup so you know exactly what to wait for?